Hello, my name is Indiana the Great, and welcome to my second video on dividend ETFs. So, if you were following up from last video, we built a portfolio based on uh, dividend ETFs or stocks that pay out dividends monthly, sometimes on a quarterly basis or on an odd basis, but mainly that. Some of the changes we made from the first video was getting rid of dividend stocks. They don't perform as well as dividend ETFs. And today we're going to go through what happened through March through May, as well as June through September with this portfolios, the changes I made, and the changes moving forward. First off, for yield, March, April, and May all had yields over 8%, with April almost having a 9% yield. The total year to date return is at 7.42% as far as the end of May, falling up around 4 points behind the S&P. Which is pretty good in my opinion when taking into consideration the amount we've been paid out in dividends and also taking into account the amount we have to pay on taxes on those. Notable events that happened during this time: Tesla did a 2-for-1 reverse stock split, the DALT fund closed and returned capital, and FEI, FIF, FPL, and also FEN, which we did not own, all converted into a combined fund ETF, EIPI. And so all of those kind of combined and kind of paid out what was the difference. So changes that we make to the portfolio from the last 3 months, we got rid of the quarterly ETFs. My initial thinking on quarterly ETFs and maybe some ones that pay out half a year every 6 months is that those would kind of be like kind of bonuses. But if you take into account how much of the portfolio was set for quarterly ETFs versus for monthly, it wasn't quite enough bonus where that capital could have been better spent on those monthly dividends that are constantly paying out those dividends that could be re-added to the portfolio. I also got rid of ETFs that had a lower yield rate and a lower return than DIA, right? Mainly by significant margin. And right here, those were OUSA, OUSM, QQQN, 6H, 6L, TPLE, and WBIG. So those were removed and again reallocated to the portfolio. And then, of course, as new monthly ETFs were added, those were added to the portfolio. And I have my updated list of all the monthly dividend ETFs and the area of monthly preferred income ETFs and some bond ETFs I use. And those links will be in the TradingView links down below. Some notable, notes moving forward on how I'm going to look at my portfolio. If an ETF does more than one reverse stock split, we will sell permanently. Unless major changes are made later on, we will not be reallocating that to the portfolio, kind of the split. We will just keep that moving forward. And for a reminder, the way the portfolio is kind of split weighted wise is think of it as one of each stock, right? So the actual price of the stock helps into that weight of it. So right now you have one of each stock. And right now we're sitting at a little over 300 different ETFs. So that is how it's weighted, as kind of have one of each kind of equally. The rule I'm thinking is a 3.6% rule. So with this portfolio, say you have $1 million, you'll be able to get 3 months after taxes and reinvesting in the portfolio. Say your average dividends are around 8-ish%. 3.6% will go to your returns. However much you calculate in taxes will go to that, and the rest will be reinvested. And you'll still work off that 3.6% over your net total amount of assets. And as I mentioned, I do have that TradingView links for what I have in my portfolio, as well as all the other ETFs that I found, as well as even the stock ones that all pay out monthly. What to look for, kind of the next 3 months, mainly what I look for through June through September, was the Victory Shares ETF, which are all of these. I was wondering if their dividends had dropped. I think I noticed a few were lower, so I wanted to see if those kind of continue to play out lower, or if that was just kind of a thing for a few months. Watch, see if other yield max funds have a reverse split. Measure any kind of the other ETFs and really kind of focus on ones that are paying more than DIA or either growing more than DIA. And of course, Granite Shares and Themes and Yield Max will be coming out with more cover called ETFs, so really being on the lookout for those. Now, if we go through June through September, June, if we look at the overall yield, I was reallocating based off the different splits and just other stuff happening that reallocated the portfolio. So I didn't really want to measure the dividends there. But if we look at July, August, and September, they were doing pretty well, kind of on an increase overall. I think during that time we had a lot more cover called ETFs. It was a kind of like a bull run during that time, so a lot of these were paying out quite well. So we did see that increase. If we look at the year-to-date earnings, we're almost at 15%, with the S&P at 21.5%. So we're looking at maybe a 6.5 point difference, but with the increased yield, I'm hoping at the end of the year that the overall return is about 8 points less than the S&P. Then that shows we're on track for matching the S&P with this portfolio and getting those dividends paid out to us without having to kind of sell. We just have to pay the taxes on the dividends versus on capital gains. So we had 3 different stocks do a 1-for-3 reverse split, or ETFs: the QQQY, JEPI, and IWMY. And also JEPI changed its ticker to WDTE. The GDVD fund closed and returned capital, and then SABA did a 1-for-2 reverse split. So changes I made to the portfolio were editing the allocation of the ones that did the reverse stock split. I bought new Yield Max ETFs that came out. Fiat and dips are ones that kind of focus on selling puts, so on the downside, making money. And then 4 other ones that came out. And then I found additional cover call ETFs that were paying out dividends monthly, and added all of these to the portfolio. So again, what I'm going to watch for in this last quarter of the year is, of course, for ETFs that already have stock splits, and to not rebuy those. Again, also looking for ones that are performing at a dividend ratio lower than DIA and still not going higher than DIA as far as return. So far from the past 3 months, I didn't find any new ones. All the ones that were paying dividends less than DIA were performing better than DIA in returns. YieldMax is planning to come out with more ETFs, as well as Round Hill, Curve, and Themes all plan to have those single stock covered call ETFs, as well as index covered call ETFs. Really looking at YieldMax as far as the kind of these covered call, especially single stocks covered call ETFs, they are performing not as great. A lot of them have had pretty negative returns, but they are paying those higher dividends. So the real question is, over time, will that loss in the capital of the stock be less or more than what the ETFs are paying out in those returns? And how does that account if you have an account that you have to pay taxes on, or if you have a tax sheltered account? Kind of what are those comparisons and returns? Also, ones that I do have on my horizon to study for the next 3 months are BKLN, EIC, ECC, FSCO, IWM, JPC, PTY, and XFLT. They all are currently paying monthly. You just want to look more into them. We also have EIC and ECC, which have pretty high expense ratios. But I do know ones like Maxi have pretty high expense ratios, but that's the way it's kind of calculated. But as far as how much is taken out of your returns each year, it's not quite that much. So I do want to look more into that. And of course, as mentioned before, I do have my current holdings here on the TradingView link, as well as the full list of all the monthly paying ones, as well as preferred bonds and ETFs, and even the ones of just certain stocks that pay that. So if you do want to look into that, I have all those resources below. If you have any questions on, I guess, my returns, how I'm tracking this, or any of these different tickers that are coming up, please let me know. Again, my name is Indiana the Great, and thank you for watching.